Okay, we're going to begin by using the NASDAQ as our example chart. And this is the continuous contract futures that I chart on the NASDAQ. So these little tags that you see here are my time cycle pivots. And I'm going to explain to you or give you a summary at least, of how I'm finding these time cycle pivots. But first, we got to orient to the chart a little bit. So the price axis is the y-axis, and the time axis is the x-axis. And the overwhelming majority of information out there in technical analysis is focused on the price axis. We focus a lot on price action. And I think that is absolutely a crucial piece of understanding how technical analysis and trading. The time and price I view like king and queen. So once we know and understand completely how to read price action, then we can look for an edge through time analysis. And so the way I do that is I use planetary cycles to find high probability changes in trend or pivots in the market. And what I find is that I can measure from major swing highs and swing lows different planetary cycles and project them forward, and they will give me future very high probability change in trend dates. You can also do this work using geometry and mathematics. There's various different methods, but this is the method I use. I use a software program called Time Trades, and there'll be a link in the video description below if you want to give that a try. So this indicator is from Time Trades, and it's called the ruler. And I'm able to anchor the ruler to any point in time. So I anchor it to a major swing high or swing low. This particular ruler is anchored to the swing low in October of 2023. And then I measure planetary cycles forward. And so you can see that these have like a fantastic degree of accuracy. So how do we turn this into an actionable trade? So let's use an example of a trade I took last week. So the way that I do this is I start on the daily, and this particular harmonic here is called Mars-Uranus, and it's 15 degrees of movement. So we're measuring 15 degrees of movement of the synodic cycle of these two planets. And we find that whenever this happens, we get a very high probability, not only daily, but weekly change of trend in the market. Okay, so we knew we were looking for a change in trend on September 3rd, 2024. So I zoom in to the 30-minute chart, and since this is continuous contract futures, it trades 23 hours a day. So this is the Globex session back here, and you can see that we were in an hourly downtrend. So I grab a fib, and I run it from the high to the low here. And I look for a rejection at the 382 level on the half-hour chart. And when we get the close below the low of the high bar at the 382 level, that's our confirmation that the trend is reversing on the 30-minute chart. And we can make an entry there. And that is an entry on the 30-minute chart with a stop above the high of the high bar here. But that is an entry that we're looking to hold on the daily chart. Since you know that you intend to hold that on the daily chart, then you would put your stop above the high of the day. And then the way I personally trade is I get risk-free pretty quickly. So I took some profit here at this double bottom just to get my position risk-free, because my initial stop was here at the 382. But what I wanted to do was to be able to move my stop up to the high of the day, which was a little higher than the 382 retracement. So then I took profit at several points along the way, because this was a particularly big move down on this day. And then you're left with a position that you can hold that is risk-free with your stop at the high. So that's an actionable trade setup based on time cycle pivots. Then we have to take a quick look also at one that was a little bit more tricky, because that one was super clean and easy to enter and exit. But if we take a look at this one that happened back here on the 22nd or 21st and 22nd, this one was a little trickier. So you can see here that we had several wicks above the and then rejections here. So this time cycle pivot came on the 21st, and I will just let everyone know that I always give a 1-day window of time whenever we have a time cycle pivot, because sometimes that turn actually will come the day before or the day after. So I'm always looking for the rejection or the price action reversal on either the 30-minute or the hourly chart. And if you get faked out a couple times on the 30-minute chart, maybe you move up to the hourly chart, because then that might give you a clearer signal. So On this one, if you would have entered on the 21st, you would have gotten stopped out. And this is another reason why it's really important to use stops with a clearly defined risk. Because on this one, we could have taken an entry, let's see here. This was the morning. This is the New York session here. We could have taken an entry here on this rejection, and we would have had a small trade, but it would have reversed and gone against us here. So we would have stopped out. And then we would have continued up here. But the next day, when the markets opened, this was actually the New York Open on the 22nd. And we had what I call this is a pump and dump. And the pump and dump is one of my favorite setups. So we knew that we were looking for a daily time cycle pivot, and we knew we didn't get it the day before. So we would try again. And here, if we tried again on this rejection here, we would enter on the close below the low of the high bar. And then we put our stop at the high, and we take profits to get risk-free, and we follow the same method. And so it works. Of course, there are going to be some pivots that actually just don't work at all. Although I will say that with my time cycle pivots, I don't actually use them unless they have at least a 70 to 80% accuracy rate. So that is how we use time cycle pivots to create actionable trades in the markets. All right, everybody, trade smart.